Hello everybody and welcome to Speaking Technically Pro RSI. I am Bharat Junjunwala and today we are going to have a look at how the whole IT sector is poised to move in the coming sessions or in the coming week. Now this is the major Nifty IT chart, that is the sectorial chart, and we can see that it is already on the resistance zone. So it has taken the resistance here and it has come down, and now it is moving up. Now we have to see how it will behave in this area again when it moves to the resistance area. Now if it is able to cross this area with a strength, right, and with a good candle on the upside and sustain at these level for some time, then we can expect the IT to move up again in the coming weeks. But if you look at the RSI, basically RSI is now hesitating to move up, and it's also taking resistance at the moving average crossover of the RSI. So moving averages are now acting as resistance on the RSI, and there is a negative crossover too. So that means that generally tells you that you should exit your long positions as of now, because it has turned negative, and it generally implies that the trend may be moving into a sideways type of direction. And also if you look at the difference between the moving averages, the short term moving averages and the long term moving averages is getting broader. uh, this does not generally means good overbought zone, but again it happens sometime that no the prices come back again and test the moving averages, that is called the mean reversion sort of thing. But keeping everything in a very nutshell, we need a good candle breakout above this resistance zone, and we need also the price to sustain here. Then only we can expect the IT to move up again, and the RSI need to move up and break this moving average barrier and come up again above 60-65 levels to establish the uptrend. Now let us look at some of the main frontline IT stocks and see how they are doing. So we start with Infosys, and Infosys, as I told you, that again you can see here on the RSI, it has taken a resistance at the 60 levels, plus there is a resistance on the moving average type of zone, and also there was a negative or bearish divergence in the stock. So this bearish divergence has pushed RSI a little bit downside, has pushed the Infosys a little bit downside, and it has given a good type of correction. But now we have to see how uh, the prices react after this correction. So if there is strength, and if there is really a good strength in the IT sector, then the RSI should move up again up above 60, and this is what a decisive level will be for the price. So above 760 areas on the Infosys chart, a good close above the 760 areas would be a good determining factor whether Infosys is moving up or not from here. And once it gets close above 760 area, we can expect Infosys to move up again. So you have to keep this on the track. Now let us look at TCS. You can see in TCS also there is a range shift, that is the RSI is taking resistance at the 60 levels and the prices are near the resistance zone. So again this is indicating that the whole IT sector as a whole is going under a good type of pressure or resistance thing. Now a good close above these resistance levels is required for a re-establishment of trend on the upside, and RSI needs to get out of these 60 levels as soon as possible and move up again. So we have to again wait and watch as of now. This is SCL Tech, and in SCL Tech again you will see that there has been a range shift, and again there has been divergence. So when you see everything, how everything behaves very similar way, there is something or other on every chart that tell you that there may be an ongoing correction or something like that. So RSI has taken resistance at the 60 levels, and also has been resisting by the 9 SMA, 9 EMA or 9 SMA, whatever. So this is again going to be a decisive factor where and where can the prices go. So we need a good close above these type of these zones to really get a good establishment of the trend. Unless and until we are not getting a good close above this, there are remote chances of Nifty IT or again any IT stock to move further. Now let's look at Wipro. So the all you have a similar type of type of formation in everything, right? So you have a negative divergence here also, and you see the moving averages on the RSI rolling down, and all are indicating a type of sideways movement with a bias on little bit on correction. So these are the levels that we have to watch for in the short term. That is, we have to see whether or not it protects the 360 levels, and if it's not able to protect the 360 levels, then we may fall down to 352 odd levels, that is the 50 SMA, and below that 311. The gates are open for 311. So this is Wipro. Now we'll again look at one more stock, that is Techem. So similarly, like Wipro and other IT stock, there is a negative divergence here, and this is the support zone. So we have to look how Techem will behave in the coming days. But Techem looks a little bit more stronger than any other IT stock right now, because it has no, it is trading above the 60 levels, and the moving averages have not crossed over. But again, this negative divergence does not rule out a good, uh, correction to this support levels again. So IT is going to be very interesting in the days to come, and a good trade setup can be can be exploited on both side, on the long side as well as on the short side. So keep tracking these type of stocks, these 4 or 5 frontline IT stocks, and it can give you a good opportunity to trade during the week. If you have really liked the analysis, do hit the like button and do share it with your friends on the WhatsApp group or on any Telegram group that you are added on. It gives us boost to bring this type of material to you every day. So this is Bharat Junjunwala signing off. Keep earning, keep learning, and of course keep sharing. Thank you.